and welcome to 11FS Spotlight. I'm Gwera Kiwana. In this show, we shine a spotlight on the best and the brightest in the tech and financial services industry to try and understand what gets them going, growing, and what they think the future of the industry will look like. So on today's show, I'm really delighted to be joined by Abbey Wemimo, the co-founder and co-CEO of Esusu. How are you doing today, Abbey?
Not too shabby. It's nice and sunny in New York, so it's something to be grateful for.
Yeah, I think the spring is definitely sprung, right? Like, I think it's that time of the year where everyone's smiling again and things are going back to normal. Today's show, we're going to talk a little bit about your career and the work that you do with Esusu. So we'll start off by, can you give the audience a 1-minute pitch for Esusu?
So Esusu is a platform that works with large asset managers and property managers. So when you pay your rent, that data is traditionally not reported into your credit profile. Esusu makes that happen by capturing your on-time rental payments data, make sure it's reflected so you can get access to quality financial product. And if you can't pay your rent, we lend you money at zero interest, paid directly to your landlord. So your landlord is profitable, you don't get evicted, and as a society, we're not solving homelessness backwards.
That's a really great pitch, and also like such a broad problem that you're tackling. We're gonna get into it, but before we do, really, can you give us a bit of an understanding of what is your role at Isusu? What do you do day to day?
I am one of the chief executive officers here at Esusu, and my day to day is simple. It depends on the day. I am the chief apology officer, I'm the chief everything officer. My responsibility is to provide resources for our outstanding team to continue to do their job, outperform, set the strategy and the vision of where we are going as a company, which is unapologetic in our own regard here at Esusu, which is to leverage data to bridge the racial wealth gap. And it's been an interesting time in the company's evolution, considering our recent round of financing. My responsibility is setting the vision, the strategy, and then empowering our teams to execute against the set objectives we have at the company.
Right. I mean, you've just mentioned the round of funding. Let's go right into that. So first off, congratulations on your newly acquired status of unicorn. What's the funding going to go toward, and more importantly, how does Serena Williams feel about the news?
Serena Williams is incredibly excited about the news. Serena bet on us prior to Esusu becoming a unicorn company. She saw the promise in the business very early on in the seed round of financing, which is encouraging. It shows our foresight in identifying businesses that can not only outperform, but also make the world a more perfect place, which is something we are utterly passionate about. The round of financing, we raised $130 million that values the company at $1 billion. I am notorious for always calling unicorn valuations a mortgage you need to pay down. Just because you have a unicorn valuation doesn't mean you should be frivolous with spending or prudent here at Esusu. And our focus is to outperform. So to that end, we're going to be investing in people, making sure we have sublime processes and we have technologies that can scale and serve the purpose of what we're trying to accomplish here at Esusu. Which is to unlock quality financial product, and by doing so, achieve our long-term vision, which is to bridge the racial wealth gap.
Yeah, I think definitely bridging the racial wealth gap is such a broad and it's a real problem that's quite tangible in America, especially very easy to understand. I mean, so when you decided to found Esusu, like, can you give us a little bit more context as to like what inspired you and what made you realize that there's a need for something like Esusu?
Absolutely. So the theology of Esusu is grounded in my personal experiences. Um, for context, I grew up in the slums of Lagos, Nigeria. I lost my father at the age of 2. and I was raised by my mother and two very spirited sisters. My mother worked at the post office, and one thing she fundamentally believed in was just the importance of education. She afforded my school fees to one of the finest high schools in the land, and then that led me to, have this perspective that my imagination should not be limited by my social economic sort of situation, or the destitution of my social position should not necessarily limit where I could end up in life. So to that end, when everyone was studying for their international exams, I did the same thing and got the opportunity to come to this magical place called America. I immigrated from negative 80-degree weather, nice and sunny in Lagos, to negative 22 degrees in Minnesota, which was incredibly cold. And it was a character building experience. But during that transition, something important happened. I did not have a credit score. My family didn't really, my mom also. We walked into one of the biggest financial institutions in Minneapolis, where all the George Floyd, shootings happened, to borrow money. We were turned away and had to go borrow money from a predatory lender at over 400% interest rate. And that, in addition to that, my mother pawned my father's wedding ring and a bunch of other jewelry. And that's how we got started in the United States. So really inspired by that experience and my co-founders, we started Esusu on three core premises. No matter where you come from, the color of your skin and your financial identity shouldn't determine where you end up in the wealthiest nation the world has ever seen, and dare I say, anywhere in the world. And that's the true inspiration of the business, really giving people a fighting chance and not relegating your social economic position to limit where you end up in life.
I really like that you've mentioned, like the disproportionate starting points that people have, in America and really everywhere in the world. I think that Esusu is doing quite a lot to basically bring people who are coming from different, immigrants, even different socioeconomic backgrounds, and doing that, work to bring people to the same starting point, I would say. But I just to go back to the story about your mother and I think it sounds like your family and your upbringing definitely played a big role in where you are today. So the name Esusu, can you just give the audience an understanding of where the name comes from? What does Esusu mean?
So Esusu is really inspired by, the idea of collectivism. This idea that I am what I am because of what we all are. It stems from Nigeria, the Yoruba culture of if you want to go fast, you go alone. But if you want to go far, you go together. That's the real root of Esusu. It's built on this concept of collectivism and the fact that, there's strength in numbers, particularly from a financial standpoint.
I totally agree. I think the strength in numbers going far together with the community that you've built around Esusu and the likes of Serena Williams, 11FS. We even ourselves were big fans of you guys. I think you're definitely going to be able to go a long distance. So more than 100 million Americans spend on average $1,100 on their largest monthly household spend, which is rent. So reports say that 90% of these people don't actually get credit for paying their rent even paying their rent on time. It sounds like Esusu is doing quite a lot to include people in the economy and in the credit ecosystem, build a credit picture of themselves using rent. Can you give us a little bit more of an explanation of how that works and why has no one really ever been able to do that in the past? Like what barriers have existed from businesses serving customers in this way?
You're precisely correct. There are roughly over 109 million Americans that send on an average $1,100 in rent to their property owners. And if you do the math, that equates to roughly $1.44 trillion annually. And on an average, rent accounts for 35% of households monthly expense, which is a significant piece. And less than 10% of that data is essentially reported and reflected in people's financial profile. So the status quo is essentially when you pay your mortgage in the United States, that data is reflected. And in 2013, there was a legislation passed in the United States around financial access, encouraging this data to be captured, transformed, and reported into the credit rating agencies, predominantly Equifax, Experian, and TransUnion. Those are the big three in the United States. But there was sort of a divide from from a public policy perspective and the execution of making sure this data flows through. So when we came into the scene, we built what we call the plumbing of capturing this data at scale in a secure manner, bringing together the key stakeholders like the asset managers or the property owners and the folks managing the assets in a seamless manner to make sure this data is captured, transformed, and reported. And when we're able to do that, we added additional suites of products and services that made it a platform, because there are other folks that figured out how to report the data, but just not in a scalable manner. And that's been the secret sauce of what we've done. We think about product innovation at Esusu as you can either build a tree or you can build a forest. The tree approach is what we call the product-based approach. You have one thing that works very well. The platform approach at Esusu is really the forest. How can you bring a plethora of products together that's well-timed and sequenced to help people live their financial best? So that's our thesis here at Esusu, and it's just been gratifying, sequel to the strong execution of reporting rental data on how we've been able to capture a huge piece of the market and continue to outperform and impact the lives of many in the United States.
I think definitely capturing that data is so important, and it's staggering what you did, the stats that you stated about like how a lot of people, their rent is a large portion of their expenditure, and that is something that doesn't even appear or doesn't even contribute to building a credit profile of yourself. Can you give us, so when you talk about like bridging the financial racial wealth gap, can you give us more insight into like the kinds of what demographics are most affected and why? Like what is it that makes folks from racialized backgrounds more likely to be left further behind, and why is rent something that you focused on as a financial tool to include them in the economy?
That's a very thoughtful question. I think we need to go down memory lane a little bit to understand the construct of what we have in front of us today. When we think about the concept of wealth around the world, and more pronounced in the United States, wealth is actually predicated on cheap debt. It is this ability, either through the institution of slavery, where you can leverage a human being, to get certain things done or build a project at no cost, or leverage your reputation to get access to financial products, such as a loan. It is this concept of trust and cheap debt, and both of them play hand in hand. But disproportionately, particularly in the United States, we've had a plethora of segregatory laws that undermine predominantly African Americans and other people of color, and prevent them in participation in one of the biggest drivers of wealth, which is home ownership. And in the United States particularly, the federal government pursued two important policies in the 20th century, where we had a situation where there was intentional segregation, right, of white families and black families. And that's the legacy of redlining. If we think about the legacy of Jim Crow, particularly in the United States, what happened here was where predominantly black families were residing, their homes were devalued or significantly undervalued or priced in the marketplace as opposed to their white counterparts. And to that end, when you think about wealth compounding, the wealth of the average white family in the United States is 10 times as much as the average black family. So for us to understand this systemic policies which was perpetrated by the rule of law in the United States, that's where we have the current construct we have today. So what we need to figure out is if the concept of wealth in America is predicated on the access to cheap and high quality financial services and products, the central question is how do we make sure it's accessible for everyone, but predominantly for folks that we fundamentally left behind, which are Black folks and other people of color. And that's what we try to do at Esusu. We're not trying to point fingers. What has happened in the past has happened. And the true spirit of what this country is about, trying to make it more perfect, trying to make it stay true to its founding creed. And what we are doing at Esusu is contributing our own humble quota to really focus on a few things. Number one, make sure where you come from, the color of your skin, or your financial identity doesn't determine where you end up in life. That's our clarion call and our premise. And number two is, whether you're white, living in Tennessee, or you're living in London, or you're living in, Barcelona, we should all be looked the same, even if you live in Nigeria, Lagos, Nigeria, Nairobi, Kampala, or Cape Town. We are all the same, and we're trying as much as possible, to get the same things. But that's not the status quo right now. And we believe with the new currency of data, the sky's the launchpad as to what we can do.
Absolutely. I like you using the word currency with data. So let's go back to what you said about cheap debt and how that is an enabler for prosperity in the capitalist world, right? And in order to acquire cheap debt, you need trust. In order to be trusted, you need to be in good standing with credit bureaus. And credit bureaus and credit scoring, in my opinion, credit scoring is inherently racist. It's inherently anti-black, inherently anti-poor. It's a mess. This is some news that came out, I think, yesterday. TransUnion is currently in the process. TransUnion is a credit bureau in the States. They're in the process. They're being sued by the Consumer Financial Protection Bureau, which is a federal body, for allegedly using deceptive marketing and dark patterns in their products. It's absolutely horrendous. Do you feel that credit bureaus have too much power?
It's a tough question because we see the complexities of what they deal with on a day-to-day basis. In the wise words of Brian Stevenson, we are all better than the worst things we've ever done. I think they have a huge responsibility, and it is all about understanding the responsibility we have in society and making sure we're fiduciary and custodian of the stakeholders that we serve. So I like to see and perceive situations from a position of compassionate inquiry and asking detailed why, so we don't fall in a situation where we compartmentalize or label folks, because the stories are usually incomplete or not as detailed for us to consume as citizens. But I think one thing that's important for us to stay grounded in, and I like your point, is what is this concept of credit scores? In the United States, we leverage a system called FICO and Vantage scores. It ranges between 300 to 850 points, and most lenders leverage that scoring model to price risk and then assign this trust level, which ranges from that if you're around 760 and above, that's what we consider a prime credit score in the United States. And if you're under 620 and below, that's what we consider a subprime credit score in the United States. And just to quantify what that means, if you have a poor credit score, around, assuming you're taking a $200,000 loan at a 30-year fixed mortgage, right? If you have a 620 credit score, you're going to pay roughly $155,000 in interest. And if you have a 760 credit score, which is considered prime and above, you're going to get $91,000 in interest over that 30 year loan. If you do the difference, 155,000 minus 91,000, that's $63,000 extra that you're paying in interest because the system does not necessarily trust you. We have a system that's predicated and treats people like they are guilty until proven innocent. And that's the quantifiable measure we deal with and the discriminatory practice. But I just want to keep us grounded on that reality as we explore this topic, because I think it's utterly important. Because I've heard a lot of folks ask me, what is the importance of this number? But keeping everyone grounded is quintessential in us having a common language on what we can collectively do to make it better. I think there are a lot of areas of opportunities when you think about the credit rating agencies, democratizing different sets of data and making it easier to better price risk, particularly for folks that the system has left behind for a very long time. So we have our work cut out for us, but I also want us to be cautious in terms of pointing fingers, because when you're in the trenches and trying to do this work, we are all not perfect, but we need to start having those tough conversations as a society. How do we get in the arena to make it more perfect?
I really like this balanced approach that you're coming with. I think a lot of fintechs tend to be, break things, absolutely abolish and disrupt the system. And there's, I think in financial services, especially, we work in that space as well. We have to also remember that there are real people, there are real human lives, and there's real impact that happens based on the decisions we make and the tech that we build. You've mentioned data. What do you see as the future of credit reporting, credit scoring? This financial trust image map of a person. What do you see as the future of that in America, or really in the world?
The future, I imagine, is really based on if you're coming from Nigeria or you're coming from Nairobi to the United States or vice versa, you should have a global credit score that follows you and your credit history, your debt to equity ratio, your payments information, that standardized level of trust that doesn't just pay attention to the loan you have, and when you go to a different country, you have to start over again. So I think we need to be more nuanced and leverage the power of technology to make that happen. I think large companies like Facebook, I can use WhatsApp anywhere. I can use Facebook anywhere. And we need to start thinking about that from a financial identity standpoint and building something that actually cuts across borders. And that's something we are passionate about. It's this idea of having a global credit score to better price risk and understand exactly what's going on. So that's the macro view. When you think about the micro view, we need to start thinking about how we incorporate additional elements of data. In the United States, the predominant sort of financial products we measure from a payment standpoint are things like your mortgage, a personal loan, a car loan, a student loan. We need to start including and creating policies like rental data. We just had an engagement with one of the largest government-sponsored entities, Freddie Mac, which controls a huge amount of mortgages for residential real estate and others in the marketplace, making sure there are incentives in place to democratize access to credit. We need to start looking at single-family rentals. We just started a big partnership with a large institution called Progress Residential, 85,000 rental units, single-family rental units. And these folks one day want to be homeowners. But at this point, their financial situation just doesn't allow it. Engaging with that team, making sure it is quintessential for us to capture that rental payment they're making so one day they can become homeowners and help them live their financial best as some of the trends we're seeing on a micro perspective. And ultimately, from a policy perspective, we need to have a huge embrace of simple policies of, look, when you pay your rent, that data should be captured. And here are some of the operational pieces that you can leverage to make that happen, not only in a few states like California and America, but more sort of cut across in different states and more globally because we're all global citizens here. We need to start thinking about innovative ways to better price risk. On the African continent, it might be you know, your M-Pesa payments should be tracked, which I know we're doing a lot of scoring with that. We should also think about other run rate activities at transactional cost, right, to better price risk and unlock capital. What I want us to, when I want to resonate with a lot of people is we are all better than the financial score we've been assigned currently. There's more to us than the predetermined algorithms. And if we want to make it more perfect, just in statistics, you need more sample size and more data points. We have to have a crystal view, not a nomothetic idea, a one-size-fits-all idea, but more of a broad-based ideographic approach to better understand and price risk. And when we do that, we can include more people. The average debt in the United States is around $92,000. There are 45 million people in this country that that have a poor credit score or don't have any at all. If you do that math, you can unlock roughly $4.1 trillion. That's not only good for folks that are poor, that's taxpayers' dollars that can be invested, in the economy, and the government also benefits. Businesses benefits. There's more spending, and we can actually leave people up because the people we talk to every day don't need an handout. They just need a lifeline. They want to live a better life. They don't want to sort of mortgage their lives on the social welfare platform, and that's what excites us. That macro view, the micro view, and trying as much as possible to have inclusive policies to get everyone along. It's something we need to spend a lot of time on if we're really serious about change.
Honestly, Abby, I think you're such a thoughtful and ambitious person, and the way that you explain, you've really zoomed out. You zoomed in and then zoomed out. Explained the more macro situation that is out there. There's other people working on similar things like this. So, for example, Nova Credit. I was recently speaking to Misha from Nova Credit. Very smart guy, very thoughtful as well. Really, doing their best to they've expanded into Europe as well. But I think one of the things that sets Esusu apart is the fact that you guys have you're doing work that is, again, seeing the forest from the trees, in that you've got the Esusu Rent Relief Fund. So can you give us a little bit of an understanding of what that is and how that came about?
That's a fantastic question, Gwera. So when we started Esusu, particularly in the rent reporting space, we're utterly passionate about this financial identity theory. And our partners we were collaborating with, it is a little bit backwards for us to say we want to help you improve your credit score and charge you an exorbitant amount. You, the consumer, that you're probably earning a low salary to make that happen. So we pass the cost up to the property managers or the property owners to better make sure our business is scalable and really focus on where the purse of capital can be unlocked. So when the pandemic came around in 2020, we became a cost item because ultimately what we were doing was just reporting rental data. And we had an inflection point and said, how do you make offense the best defense? And the way we make offense the best defense is to think alongside our customers, which are the landlords, and the residents don't pay anything. And we asked ourselves this question: how do we make sure our services are accretive to their bottom line or their top line, depending on how they run their business? So we wanted to create a win-win-win construct. In society, we always have situations whereby people are pointing fingers. Oh, my property manager is horrible. And the relationship has this weird connotation because everything your property manager does or is collects from you on a monthly basis, right? Rent, the money is just going out every time. And what we wanted to do was eradicate or minimize that schism between both parties. And the way we were able to make it happen was went to large institutions that usually fund homelessness when people are already on the street and say, how about we prevent the status quo here? How about we give people a fighting chance? And if someone cannot afford to pay their rent, let's use your capital, set a portion of your balance sheet. We are going to find the people, because at Esusu we have 2.5 million, our partners have 2.5 million rental units, roughly 7 million people residing in those units across the United States. So we have the inflow and we know folks that are delinquent. The question then becomes, how do we prevent that with real-time data? So when folks are delinquent, during COVID, we came up with this idea and they agreed, they allocated a portion of their balance sheet. So if Gwera cannot afford to pay rent, Esusu reaches out proactively, Gwera accepts an application, we can extend up to 3 months of your rent so you can get back on your feet. And you can go get access to, you can go to a workforce training and get a new job and be a better participant in society rather than being on the streets, which could cost the government north of $120,000 annually. So we devised this strategy. And when we implemented it at the heart of the pandemic, our clients, which is our property owners, won, because now they don't have to evict people, spend money on that, less turnover cost. Reputational risk was also intact because no one is marketing that our partners are evicting people at the epicenter of a pandemic. So they won. Our residents, folks who are focused on, can also stay in their homes. We're establishing their credit scores. We're building their credit scores, getting them access to quality financial products. And guess what? We all fall behind. If we can't afford to pay your rent, here's 3 months, up to 3 months of rent to get back on your feet, because we believe in you, we bet on you. And then, we provide this data to government institutions and partners we work with to understand what the pulse is in the marketplace. So that's the win-win-win construct. A win for the property owners, a win for the residents, and a win for society at large, because our taxpayers' money is actually preventing homelessness rather than, addressing the issue when folks are already on the streets. So it's this idea of not dealing with the symptom of a larger disease, but rather focusing on the root causes. And that's what gets us excited at Esusu. And Esusu was a seed company in 2020 with 11 employees. And when we took that offense amidst the pandemic, we've now grown to roughly 164 people.
Wow.
And $1 billion company.
Congrats. I mean, honestly, Abbe, I could talk to you for hours, and I feel like the insight that you have and the way that you think about the world and the work that you do is so fascinating. But we are coming to the end of the show. And as we wrap up, I really want to ask you one last question. And you can feel free to answer this however you'd like, fintech or not. What advice do you have for other founders, operators, or really just even regular people working to reduce the racial wealth gap?
It's a very thoughtful question, where there are 3 advice I have. Number 1 is to not settle for the status quo and accept mediocrity as the order of the day. One of the things that annoy me the most is when people say this is the way things are done and we're just going to accept the status quo. We need to think big. We need to fall forward. I used to be in investment banking and work in mergers and acquisition and consulting. I was earning a good living. I grew up very poor. And when I told my mother I was leaving the comfort of corporate America, where I was earning a lot of money, my mother looked at me and said, I thought we made it. But my advice, number 1, is to fall forward. Think big and think about how you can contribute your own humble quota to make the world a more perfect place. Because one thing is guaranteed in life: our leases will expire one day. We are all going to die. So what impacts do you want to have? And on your deathbed, do you want to ask yourself, what if? Or did I pursue and give it everything? That's the way I live my life, and I hope folks can live their life that way. Number 2 is you will fail. That is fundamentally guaranteed. If you're doing anything and you've not failed, you're not trying hard enough. But the most important thing from failure is to be caught trying. You got to be. Michael Jordan is one of the best basketball players. Thierry Henry is one of the best, football players. Lionel Messi, and a whole bunch of folks out there. We tend to celebrate the successes in society, but we don't pay attention to the failures. But what's important within that is the work needed to get there. We don't celebrate the process. We don't celebrate the hard work. But for us to accomplish our goals, there will be sleepless nights. There will be failures. There will be a lot of no's. There will be a lot of naysayers. But you got to be caught trying. You gave it everything and you didn't settle, but you were found trying. And if you're found trying, there's an African-American saying in America that says, if you hang around the barbershop, sooner or later you're going to get a haircut. Right? You go to the barbershop, you sit there, you're going to get a haircut. You just got to be caught trying to make this world a more perfect place. And my last advice is really one of collectivism. It goes back to what Esusu stands for. If you want to go fast, you go alone. But if you want to go far, you fundamentally go together. You have to pay homage to folks that have been here before you. You have to acknowledge and understand the history. But for us to have really systemic change, and that's what we practice at Esusu, it needs to be a platform approach. It needs to be a forest approach, because one thing cannot necessarily have systemic change. You need a cacophony of ideas to make this world what we think it can become. And doing that forces you to do what we don't like doing as human beings, which is talking to folks that are different than us. That's how you grow. If you stay in your echo chamber and just hang out with people that you're not going to grow and you're not going to challenge yourself. And that's one of the perils we're suffering from Brexit to what's going on in the United States and the insurrection we saw. But those are my advice. It's really simple. Number one, make sure you focus on this idea of collectivism, from backwards. If you want to go fast, you go alone. If you want to go far, you go together. Number two, be caught trying to make the world a more perfect place. Number three, don't rest on your laurels. Fall forward. Fall forward. And that's how we make it happen.
I'm gonna watch this back later and take notes, because that's just such great advice, and thank you so much, Abbe, for taking the time. I feel really honored that I got to interview you. So really, that's the show's coming to an end. Thank you so much again for joining me. Where can people find out more about you and everything you're getting up to?
You can find out more about me on LinkedIn. I'm very active on LinkedIn. It's Abbey Wemimo, very visible there. If you want to find out about the incredible work myself and my colleagues at Esusu are doing, it's at esusurent.com. Very easy to find us. And I just want to express my deepest gratitude for all the thoughtful questions that you've asked, and the greater team to make this conversation happen. It's truly the power of a collective that makes this production happen.
Yeah. And
for everyone listening out there, the best is still yet to come.
Thank you. Yeah, shout out to our production team. We have such a great team at 11FS. So thank you. That's all the time we have for this week. Make sure you follow 11FS on LinkedIn, Twitter, and Instagram, and also TikTok to stay updated on all the cool stuff we're doing. If you enjoy our show, please do subscribe to the 11FS YouTube channel, where you can catch up on previous episodes. Have a wonderful week, everyone, and goodbye.